Building real wealth has never been about one big win. It's about stacking assets that pay you over and over, with less dependence on your time. Passive income is often oversold online, but done right, it's still one of the most reliable paths to long-term financial freedom. As we move into 2026 and beyond, the landscape is shifting. Interest rates, technology, remote work, and AI are reshaping how income is created and scaled. Some classic passive income assets still work. Others need to be updated. And a few new ones are becoming powerful faster than most people realize. This guide breaks down 20 passive income assets that can realistically help you build wealth over the next decade. Some require money up front. Others require time, skill, or patience. None are get rich quick. All are built on ownership. 1. Dividend-paying stocks. Dividend stocks remain one of the simplest passive income assets. You buy shares in profitable companies and receive regular cash payouts, usually quarterly. Over time, reinvesting those dividends compounds growth. What's changed is how accessible this is. Fractional shares and zero-commission trading mean you can start small. The real wealth comes from consistency and time, not picking the perfect stock. Strong dividend assets typically come from companies with stable cash flow, utilities, consumer staples, healthcare, and established tech firms. Dividend growth matters more than yield. A smaller yield that grows annually often beats a high yield that gets cut. This is best treated as a long-term asset, not a quick income source. The power shows up after years of reinvestment. 2. Index funds and ETFs. Index funds aren't exciting, but they work. They give you exposure to hundreds or thousands of companies with minimal effort and low fees. Many broad market ETFs also pay dividends. The passive element comes from automation. Once set up, contributions and reinvestment can run on autopilot. Over decades, this asset quietly builds wealth for millions of people. In the coming years, global and sector-based ETFs will continue to grow as economies shift. Clean energy, AI infrastructure, and emerging markets are likely to remain long-term themes. 3. Rental real estate. Rental property is one of the most proven wealth-building assets in history. You benefit from cash flow, appreciation, tax advantages, and leverage. True passivity comes when management is outsourced. That reduces monthly income but frees your time. The asset still grows. In 2026 and beyond, smaller multifamily properties, short-term rentals in drive-to locations, and affordable housing will likely outperform luxury rentals. Location and numbers matter more than height. 4. Real estate syndications. If you want real estate without managing tenants, syndications are an option. You invest capital into a professionally managed deal, often apartments or commercial properties, and receive a share of the profits. These are less liquid and usually limited to accredited investors, but they offer hands-off income and diversification. The key is vetting the sponsor and understanding the risk. This asset works best as part of a broader portfolio, not your only strategy. 5. REITs, real estate investment trusts. REITs combine real estate with stock market liquidity. You can buy them like a stock and receive regular income from rent-producing properties. Public REITs offer daily liquidity. Private REITs may offer higher yields with more restrictions. Both can play a role. REITs focused on data centers, logistics, healthcare, and residential housing are especially relevant in a digital-first economy. 6. Digital products. Digital products are one of the most scalable passive income assets available. Examples include ebooks, templates, checklists, software tools, and design assets. The work is front-loaded. You build once, then sell repeatedly. Updates may be required, but there's no inventory or shipping. In 2026, niche-specific products outperform broad ones. People pay for clarity and convenience. A simple spreadsheet that solves a real problem can outperform a long course. 7. Online courses. Courses are still viable, but the market is more mature. The days of generic, make money courses are fading. Courses that win now are outcome-focused, specific, and practical. They are often paired with community, templates, or live components. While not fully passive, evergreen courses with automated funnels can generate income with limited ongoing involvement. 8. Royalties from writing or publishing. Books, guides, and paid newsletters can generate royalty income for years. Self-publishing platforms have lowered barriers dramatically. This works best for people with expertise or a strong point of view. Short, useful content often outperforms long, unfocused writing. iTools can assist with editing and formatting, but original thinking remains the differentiator. 9. YouTube automation channels. YouTube remains one of the largest passive income opportunities online. Automated channels use voiceover, stock footage, and editing teams to produce content without appearing on camera. Revenue comes from ads, sponsorships, and affiliate links. Success requires research, consistency, and patience. Niche matters. Educational, finance, history, and explainer content tends to age well and continue earning. 10. Affiliate websites. Affiliate sites earn commissions by recommending products or services. Content ranks in search engines and generates income over time. This asset requires upfront work, keyword research, writing, and optimization. Once established, maintenance is minimal. In 2026, trust-driven content wins. Thin, spammy sites will continue to disappear. Depth and usefulness matter. 11. Licensing intellectual property. If you create something valuable, you may be able to license it. This includes music, photos, designs, patents, or even business processes. Licensing allows others to use your asset in exchange for royalties. You retain ownership. This asset is overlooked but powerful for creatives and inventors. 12. Mobile apps. Apps can be passive when monetized through subscriptions, ads, or in-app purchases. Not every app needs millions of users. Utility apps that solve narrow problems can generate steady income. Development can be outsourced if you manage the concept. Ongoing updates are required, but daily involvement is often minimal. 13. SaaS businesses. Software as a service is one of the strongest wealth assets today. Recurring revenue compounds fast. Micro SaaS products that serve a small, specific audience are increasingly popular. Examples include tools for freelancers, agencies, or niche industries. Once stable, a SaaS business can be semi-passive with support and development handled by a team. 14. Print-on-demand brands. Print-on-demand allows you to sell physical products without inventory. Designs are printed only after a sale. Margins are thinner, but the model is flexible. Evergreen designs can sell for years. This works best when paired with strong branding or niche audiences. 15. Vending and automated retail. Physical automation is still relevant. Vending machines, ATMs, and smart kiosks generate cash flow with minimal labor. Location selection is critical. Maintenance is required but predictable. This asset is often ignored because it's not flashy, but it works. 16. Farmland and agricultural investments. Farmland has historically been a strong inflation hedge. Investors earn from crop income and land appreciation. Modern platforms allow fractional ownership, making this asset more accessible. As food demand grows globally, agriculture remains a long-term wealth play. 17. Royalties from music and media. Music catalogs, sound effects, and video assets generate royalties across platforms. This asset benefits from long-tail consumption. Older content continues earning as it's reused. Ownership matters more than virality. 18. High-yield savings and cash alternatives. While not exciting, optimized cash plays a role. High-yield savings, money market funds, and treasury ladders provide low-risk income. These assets protect capital and provide liquidity for future investments. They are a foundation, not the engine. 19. Private lending. Private lending involves loaning money directly to individuals or businesses at agreed terms. Returns are higher than traditional savings, but risk is also higher. Proper contracts and diversification are essential. This asset suits experienced investors with strong risk management. 20. Owning online communities. Paid communities, memberships, and forums can become durable income assets. Value comes from connection, access, and shared goals. Once established, communities can run with moderators and systems in place. In a digital world, belonging has monetary value. Passive income isn't about doing nothing. It's about doing the right work once and letting ownership do the rest. The most successful people don't chase every opportunity. They build a few solid assets and let time compound their efforts. As you look toward 2026 and beyond, focus less on trends and more on fundamentals. Cash flow, durability, and control. Wealth is built quietly, asset by asset. Thanks for watching Legacy Finance. If this video helped you think differently about money, wealth, or ownership, make sure you subscribe and turn on notifications. New videos drop regularly, focused on building real assets, long-term income, and financial decisions that actually last. Hit the like button if you got value, and share this with someone who's serious about building their legacy. Have a question or a topic you want covered next? Drop it in the comments. I read them. Less noise. More ownership, real wealth. See you in the next video.